What is happening, investors? It is your boy Jack. I am not a financial advisor, and today what I want to do is I want to speak about the top 10 stocks that I'm going to be keeping an eye on going into next week. As you'll all probably be aware, this was a very good week in the stock market. We saw loads of green days, a lot of our portfolios went up in value, some of our stocks went up 10, 15, even 20+%. And it was for that exact reason I actually didn't end up buying any stocks this week. But I don't like going 2 weeks without putting any money into the market. It's just not the way I roll. So what I've gone ahead and done is I've started looking into a few different companies, a few different stocks, and I finally have my eye on a few that I more than likely will be happy to buy next week, all going well. And what I do decide to buy next week will depend largely on what happens today, Friday, and the next 2 days over the weekend. What kind of news comes out, how it affects pre-market, if there's any sectors that get hit particularly hard. You know, you always have to take advantage of these things. Because right now, there's not really very much whatsoever I see in the market that's really attractive, that looks like a really nice price. So the first 5 companies we're going to speak about today are companies that aren't in my portfolio, and I don't think I've ever even mentioned on the channel before. So 5 brand new companies that are on my watch list. And then the other 5 are companies that I do currently hold a position in, but I'm confident enough in to buy more in. So right before we get into the 10 stocks, can I ask you to please smash the video a like? It helps me out so much. Drop me a comment, let me know what stocks you're looking at next week, or even what stocks you bought this week. I'd be interested to see what value you guys saw in the market. And subscribe if you're new around here, baby. Hit that red button, same color as this jumper. I would really love to hit 4,000 subs. But anyway, with all of that being said, let's get straight into the very first pick of today. So people, the very first company we're having a look at today, and what I'm quite excited about, it's Consolidated Edison. And I've actually had these guys on my watch list a few months since I started investing. I just didn't really give them enough thought back at the start. And so a lot of you guys might not even know who they are, so we're going to go through that, okay? First of all, they have a dividend safety of 90, a dividend yield of 4.38%, and an uninterrupted dividend streak of 46 plus years. Now, what do they actually do? What is their business? They serve as a regulated electric and gas utility to the New York metro areas and Westchester County. Is that how you say it? Westchester County. So most of their earnings come from here. They provide the electric service to approximately 3.5 million customers and gas service to about 1.1 million customers in New York City and Westchester County. The company also provides stream service in parts of Manhattan for heating purposes. So this is the biggest thing that they do by far. And another thing that's quite exciting about these guys is in December 2018, they acquired Sempra Energy solar business for 2.1 billion, becoming the second largest solar power provider in the country. That's pretty cool. So the first thing we're going to do is we're going to have a look at these guys' stock and how it has moved back since 1980, so 40 years. And at the very peak in 40 years, it returned, over 1400%. You know, there's only really been a couple of big dips along the way, but overall it's always been up and up and up. Now, in the last 6 months from the highs, there was this initial dip, then it went back to the highs, and then this big dip all the way down 30%, so not performing particularly badly. They made this fantastic recovery, we're only down 5%, and they've been going back down since, and we're currently still down about 26% in this company. When I see a company that's been around as long as these guys, has paid a dividend as long as these guys, has pretty much a 4.4% dividend yield, and has a very consistent uptrend in the last 40 years, that looks like a fantastic buy to me. And obviously right now I'm looking for stocks that aren't really overvalued or haven't just shot up in value, and this is one of those guys. They're still down quite a bit from the highs, and everybody needs their gas and electricity, so these guys aren't going to be going anywhere anytime soon. Now, of course, in these videos where I speak about 10 stocks, I don't go into deep depth because the video would take forever and ever, so I'm going to pretty much leave it there. Now, the next one we're going to be looking at is actually Vodafone, okay? So it might look a little bit weird off the bat, but dividend yield of 6%. Dividend safety of 40, and their dividend streak is pretty much non-existent. I believe they have paid a dividend since 1998, but it obviously has just been up and down. It's been all over the place, so it definitely isn't the safest dividend in the world. And these definitely aren't a company that I would consider to be one of the safest in the world, but they have somewhat piqued my interest to an extent. I'm definitely not saying I'm going to buy these guys, but I am going to be watching them. One of the reasons I even started looking at these guys was because I saw this. Vodafone names the Heineken CEO as a new chairman. Not the biggest news in the world, but they hadn't been on my watch list at all. I'm just keeping an eye on them. I don't want to go too far into these guys. I don't recommend buying them just yet, but keep the eyes peeled. So company number 3, we're actually looking at Aurora Cannabis. A cannabis related company. That's a company I've never spoken about, a sector I've never spoken about on the channel, and I'm not sure why. I was going to make a video on them a while back and it just never happened. I have been looking at these guys for an awfully long time, and I'm kicking myself right now. So we can see for a long time they've been going down and down and down massively, and what's just happened the last week, where are we? We've gone up nearly 200%. 100%. And I cannot tell you how close I was to buying these guys last week. I was this close. I remember I had them open on my app. I was like, it's finally time I'm going to get into some cannabis related stocks. I always like the look of these guys. And then boom, this happened. So a massive reason why this happened was because after the market closed on Wednesday, Aurora announced that it struck a deal to acquire Reliva LLC, a popular retail CBD brand in the US. So these guys are based in Canada right now, and now they're trying to penetrate the US, which obviously gives them access to so many more customers, so much more potential money. If you know me, if you know anything about me and spec stocks as such, stocks that move 100% plus in the space of a week, you know that I'm not going to be buying these guys. Simply put, it's not going to happen. Even if I do somewhat like the long-term prospects, I already feel like I missed out on a lot of what's going to happen. And I also think that when a company goes up this much, inevitably some people are going to be happy with the money they've made. I mean, if you make close to 200% in a matter of a week, you're going to be somewhat inclined to sell. You expect lots of people to sell, and you might buy in cheaper. So I'll be keeping a very close eye on these guys. If I do see some sort of a pullback, I may well finally pull the trigger and get in on these guys. But again, I do see them as a relatively high risk company. Cannabis is still relatively new in the world of legality. You know, we don't know where it's going to go in the long term. However, I do want to get my foot in the cannabis market. I do believe it will be a massive industry someday. Okay, boom. Let's speak about Pembina Pipeline Corp with a dividend safety of 80, a dividend yield of 7.12%, and an uninterrupted dividend streak of 23 years with only an 8% growth streak, but still it is what it is. So if you've been up to date with the channel, you know that I have wanted to get into some more of these pipeline related stocks. Okay, these guys founded in 1954, they're a major transportation and midstream service provider with a network of oil and gas pipelines, storage facilities and processing plants located primarily in Western Canada. These pipeline related stocks, these are one of the few opportunities I see in the market right now. One of the stocks that have still been hit very, very hard, who have shown themselves to get through these tough times and, you know, come out on the other side very much so on top. So these are one that I'm going to be more inclined to buy than, say, for example, Aurora Cannabis or Vodafone, anything along those lines. But these guys have that 7% dividend, okay? And you know, if you're investing in a company with a 6, 7, 8% dividend, you're happy with relatively slow growth in the stock price itself. That's just the way it is. If a company pays that big of a dividend, you don't expect hundreds and hundreds of percent. With these guys, they've only ever had one major crash, and that was here 2014 to 2016, and this was to do with pipeline politics in Canada and the 2014 to 2016 energy crash. And aside from that, just looking at the max stock chart, it has been fantastic growth in the upwards direction. I mean, look at this. From here to their very peak, in a matter of 4 years, that was 136%. Now, they dropped off massively. And now, in about 10 years, they've gone up close to 150-ish%, which for a company that pays that 7% dividend is fantastic. Now though, they dropped as much as 70-ish% from their highs, and they're still down about 33%. I just think for a company that has such a good history, a company that has shown so much of an upward trend in their max stock chart, a company that has that 7% dividend, and a company that has proved themselves in tough times numerous times in the past, I think from a long-term point of view, these guys are exciting. And again, these are ones I've had on my watch list for a very long time. I watched them get hit really, really hard when I was brand new to investing and I was too scared to get into them. And then I watched them rally back up and I was new to investing and I was too scared to get into them. And now I think I'm just about ready. So again, I'll see what happens over the weekend. I'll make my mind up a little bit clearer. So next up, guys, we have one that may surprise a few of you. Okay, I'm looking at Abbvie. Okay, now these guys are in biotech, and if you've watched the channel, you've heard me say before that I don't really have an interest in biotech related companies. But what I mean is, I don't have an interest in all of these speculative biotech companies. You know, the ones who come out and say that they've found an antibody for the virus or a cure for the virus, and their stock price shoots up 100 to 150%, and then the next day it's back down 100 to 150%. These guys actually have a track record. They're a big company. They're not just, you know, a spec stock. So they have this dividend yield of 5.07%. They have a dividend safety of 50 years, and they've only been paying that dividend for 6 years. But that is because they were spun off from Abbott Laboratories in 2013 as a standalone biopharmaceutical company. And these are another one of the companies who've had a fantastic rebound, okay? So from highs to lows, dropped 34%. As of right now, only down just under 5%. So, you know, very, very good rebound. Their EPS is expected to be 11.01 per share for the fiscal year ending December 2020, which represents a year-over-year change of 23.2%. So they're doing absolutely fantastic business. And recently, Abbvie completed their transformative acquisition of Allergen. But essentially, this worked out quite well for both companies. Combining forces has potential to create a larger, more diversified biopharma business that can alleviate investors' product concentration concerns while also building a more solid foundation for long-term growth. So it's just expansion, that's all it is. They want more products and they want us investors to feel safer in our investments. I think what's important to understand with these biotech companies, they're always going to be very, very cyclical. For me right now, this is more of a stock to watch than a stock to buy, but who knows, I could well pull the trigger on these guys. We'll have to wait and see what happens next. Okay guys, so the next 5 stocks are all stocks that I do actually own and I want to buy more of at some stage, whether it be next week or whether it be in a month or so. But we're going to go a little bit faster through these ones just because I've spoken about them all a considerable amount before. First of all, we have Exxon Mobil. I spoke about these guys just yesterday in my stocks to buy now and stocks to avoid now, and I said that I more than likely will buy these guys next week, and I still completely and utterly stand by that. So, when in doubt, when you don't know what to buy and you want to get some market in the money, what I like to do is I like to just buy my big paying dividend stocks. A big reason you buy a company like Exxon, who has that close to 8% dividend yield, a 55 dividend safety, and a 37 plus year dividend streak, is for this number here. Simply put, it is for that dividend. And the more of this company you buy over time, you know, if you keep buying piece by piece in 5 or 10 years or so, that dividend is going to add up to quite a lot of money. So when I don't know what to buy, I don't have a problem buying something like these guys. So Exxon, boom, hit quite hard as of late, down as low as 55% in the red and currently still down 37% from the recent highs. So for a company with such a big dividend, such a long history, and the company who is the largest publicly traded petroleum and petrochemical enterprise in the world to be down that much, it seems like a pretty good time to buy them to me. When oil price is back to normal, when supply and demand is back to normal, as economies, as countries start to open back up and need oil again, these guys are going to do better because of it. So I want to take advantage while they're down quite low and hopefully, you know, make some money on them. So that's it for Exxon. Now, straight on to AT&T. Okay, another company, massive dividend, 7% dividend, 65 dividend safety, and again, a 36 plus year dividend streak. And a lot of the same things can be said for AT&T as I just said for Exxon. A big reason I would be willing to buy these guys right now is because of that massive dividend. When times are uncertain, when times are tough, I just want to increase my big dividend payers. So AT&T as a whole only went down 30% and are still down about 23-ish%. So, you know, definitely not the worst in the whole world. They still are down a decent bit though in the grand scheme of things compared to where a lot of other companies are. And these guys have had a rough last 5 years. Now in 2019 there was a nice bit of traction picked up, to be fair. Where are we? We went up about 30, 33 whatever percent, you know, in or around. And then this massive sell-off happened, and this was off the back of a messy 3 or 4 years beforehand. So it really has been all over the place. But that last year has shown some promise to what could happen going forwards. And again, when you buy a company like AT&T with that 7% dividend, you don't expect the most growth in the whole world. You expect it to be somewhat cyclical. There is a lot to be said about these guys though, so I might make a full video on them someday. If you want that, drop me a comment down below, let me know, because I will make that for you guys. Facebook, baby. The big daddy Facebook, one of the tech giants, one of the companies that everybody loves, one that I only recently got into my portfolio and is already up 10+%. So these guys, let's say from highs to lows, they went down 32%, okay? They are now up 6% from their highs. From the bottom, they are up 60-ish%. In the last 5 days, up nearly 13%. For a company as big as Facebook, man, that is absolutely massive stuff. A big part of what happened last week was Mark Zuckerberg's firm announced in a blog post that it's launching Facebook Shops, which it calls a mobile-first shopping experience where businesses can easily create an online store on Facebook and Instagram for free. This to me is really exciting. You may or may not know, I am actually in the process of setting up an online store right now, and if I could have that online store on Facebook and Instagram as well, that's going to be absolutely fantastic. So I don't think you even need a piece of news like this to buy Facebook. We expect them to be these kind of people. We expect them to be innovators. We expect them to always make their service better. You don't need this news, but it's always nice to see it at the same time. But anyway, that's Facebook. I don't need to go into depth. You knew these guys had to make an appearance at some stage. We have Delta Airlines. Now, you know exactly how bullish I am on these guys. You know I've been buying them every single week pretty much. I really have been buying them aggressively. They're the biggest position in my portfolio. And even I right now, am not buying these guys, okay? Because they went up 20-ish% in just over a week. You know, they went up absolutely massively. And don't get me wrong, I am delighted this happened. But it doesn't take a genius to realise that the red days aren't over for these airlines. There is going to be some more tough times. I don't think that 23.38 is the lowest price we're ever going to see for Delta again. so I'm not really pushed on buying anymore. That's the only reason. So they are on the watch list, and I will be watching these guys every single day. I'll be keeping up with the news, as always, every single day, because when I see a significant drop in this value, I will be snagging up some more shares at a juicy discount, as I did the whole way down. I was buying shares. I bought shares down here, down here, down here. I don't want to buy shares up here and up here when I believe that at some stage we're going to see another dip, at least like this. That's literally all I'm going to say for Delta, because I speak about them every day. And the final company we're going to speak about today is Disney, okay? Disney, again, a relatively controversial one who has performed fantastically for me. I'm up about 20% in my position with Disney right now, and I do want to add more to the position. So Disney back in May 5th did suspend their dividend, and what happened in May 5th? We're around here. Not very much whatsoever. It didn't really affect the stock price whatsoever. And oftentimes when a company will suspend its dividend, a lot of people will sell the company. So it goes to show that people don't buy Disney for the dividend. They buy Disney. I buy Disney because I believe in the growth in the long term. And I mean, we look at the max stock chart and there's just been disgusting amounts of growth all over the place, especially the last 10 years. Just look at that run upwards, man. It's been absolutely crazy. The last 5 years, yeah, there's some sideways trading, but at some stage it booms up, and then we got hit. We got hit to the extent of nearly negative 40%, and right now they're down nearly 16%. Obvious to know why. Their theme parks had to get shut down. That's an absolutely massive income source for Disney. ESPN is not playing live sports. Their main saving grace was the release of Disney Plus. This has helped them out so much in these tough times. But again, Disney is one I'll probably make a full video on at some stage in the future, just because these are one of my favourites, and they're one that I probably will buy and hold forever and ever, because I believe that Disney will far outlast my lifetime. I mean, man, they got films like The Little Mermaid, Mulan, The Lion King. Everybody's seen The Lion King. Everybody loves The Lion King. Aladdin. Everybody loves Disney. It don't matter if you're 6 or if you're 60, you will love Disney. So guys, that is it. That is 10 stocks to watch next week, some of which I very much so hope to open a position in for the very first time, or I want to add to my positions in, and some are in there just to keep an eye on them, just because I'm a little bit nosy. I want to see what happens to them next. Hopefully you guys did enjoy. If you did watch till the end, I appreciate you so much. You helped me out a lot more than you know. I really do appreciate you. If you haven't yet, please do hit that like button. Again, that helps out massively. And subscribe if you're new around here and you're enjoying the content. We're on the road to 4K subs, baby. We're nearly there. With all that being said, guys, I hope you have a fantastic day, and I will see you all for tomorrow's video. Have a good one, guys. Peace.